Okay. What's up, everybody? Sound and video both working. Thank you, Mario. All right, how's everybody doing? Okay, I think I'm all set up here. All right, we'll jump right into it. A few interesting updates to share with everybody. Kind of things we've been talking about throughout the year. We've discussed on this webinar and in the room. And potentially maybe something even setting up into the new year, right? Kind of looking at positioning extremes. So kind of we got a few things we can go over. Let's talk about the market, and I think it's a good segue into all that stuff anyway. I don't need this headset. All right, what's interesting the interesting part about the market here, now that we officially are done with earnings, NVIDIA done, thank God. The election's gone. Really, now you get into the quiet time of the year, and what interests me most around this time of the year is more so what pockets or subsectors, individual names can attract momentum. Because a lot of times you get around the holidays, you get a lot of dull price action, right? You can get melt up situations, especially when players are chasing for performance and they're underexposed and stuff like that. We'll talk about that in a second. But from my experience, even if the indexes are on the weaker side or on the choppier side, the alpha, the money to be made is in individual names. We've been kind of talking about that for a few weeks now. Ultimately setting up, what would the backdrop look like when we get to this point now where earnings are behind us, the election's behind us, and where can we find momentum at the year end? I think the tricky part, and I also think there's a bit of risk at the same time as well, is with the indexes themselves. And the reason why, if you go back and think for the last few weeks now, the interesting dynamics that were at play, we spent a lot of time talking and discussing how even though there's almost like euphoria in certain parts of the market, right? A lot of bullish action, extreme bullish action in certain parts of the market. You had a big chunk of stocks that were still heavily shorted and, more importantly, underexposed to, right? This whole bull phase we've been in, and you can even go back to the lows of 2022, has been more of a defensive rally than a risk-on rally. And for that reason, you've had a lot of positioning at extremes in certain pockets, again, which this is not new to you guys if you've been on the webinar in the room. A lot of mega cap quality type stuff that is overowned, but at the same time, whole rest of the market where nobody wanted anything to do with. And little by little, what we've been seeing coming out of the summer is an unwind of that trade, right? And the difficult part of trying to figure out what the indexes may look like, I think it's almost impossible, an impossible feat. But how do you determine what the S&P 500 or the Nasdaq 100 looks like in a month or two if the bullish action, the risk-on type of activity we'll continue to see is an actual unwind of what players have been long and bullish of for so long, right? So that's kind of the interesting wrinkle that's at play here. And if you try to stay away from the indexes and some of those crowded areas of the market and look for decent entries and risk-reward setups in the stuff that is not overowned, there's been some decent opportunities out there, right? To say the least. So, we've been talking a lot about that, especially on this webinar, week in, week out, for a couple of months now. And, there's some interesting things to look at, kind of a few updates here on some of the stuff we've discussed, right? So let's dive into some of the big picture signals that we look over on this webinar. Okay, so this has been the bullish feather in the hat, right? And that even though there have been parts of this market that people are really excited about and own way too much of, right? That's a risk. At the same time, net, you have a big chunk of the positioning out there, aka hedge funds, that overall in single names are not overexposed. Now, when you dive into the details of what they own a lot of and what they don't own, that's kind of the stuff we've been talking about and focusing on over the last few weeks, months, right? So we've talked about, so this is where, so we don't just skip over it, this is hedge fund exposure in single names up to date as of right now. Okay? So you can see still hugging the neutral one. Right? Net, overall in its entirety of single names, hedge funds are still flat overall. Okay? But we know that doesn't apply to every name out there, right? This has been one we've spent a lot of time on. Right? And we've been talking about even more recent because we've seen a really nice unwind here, especially on the long side. This is an updated version of that semi-verse software positioning chart from Goldman Prime. Right? So if you remember, let me go back and pull it up. I should have had it up here just so you guys can compare it. If I can open this up today. Hello? Okay. Oh, am I going to have to do this? Hold on. So many freaking people out there. Tell me I can't search it today. Did I type it in right? Wall Street, Jesus, semis. Didn't I say semis? I think I placed it as semis. Hold on. Of course, today I can't find it. I can find it on my Wall Street Jesus account, but I'm going to have to sign off here. Hold on. I don't have it here. When I want it, I can never find it. Okay, regardless. If you remember these, you can see it on this chart anyway, but I just wanted to show you where we're at when we were talking about it in June. Okay, so here is June. This is where we started talking about it. The brown maroon line here is exposure to the semiconductors and semi equipment, right? And you could see it here when we were highlighting it, it was at the most aggressive, right? The largest position, largest exposure they've had in the name ever. And at the same time, while they were crowding into the semis, okay, you remember all those semis. You had NVIDIA go parabolic, Broadcom go parabolic, QCOM, AMAT, AMD, I mean, the list goes on and on. You name a semiconductor, they basically all went bananas, and everybody wanted to own them, and everybody thought they will never go down again, right? And that's what you get when you get that type of price action and emotion in the market, okay? At the same time, while they were doing that, okay, they weren't bullish on the entirety of the market, right? They weren't risk on. They weren't bullish on the economy, thinking, all right, we just want to own risk. We want to go out there and buy all of tech. They were probably even more aggressively selling software, right? And you can see by the blue line here. Now you fast forward to where we are now. And if you've been following this trade at all, and forget about even the pair trade, for those of you who do have interest in individual names and trade individual names, that's where the action's at. That's where the money's to be made, right? If you're looking to get aggressive at all. But since June, if you look at the majority of the software names, they have absolutely exploded. Okay, there have been some laggards. Now you even have some of the laggards, the worst of the bunch that have moved. But you look here, right, and you say to yourself, from June, there was a lot of headway, right? The semis have done absolutely nothing. You take NVIDIA out of the semi sector, and it looks probably awful right now as a whole, right? Look at the semis over the last few months here, right? So if you chase those highs where everybody else apparently was, okay, you have lost money and have had dead money now since the summer, with the indexes at new highs and some other things unconscious, right? And you take NVIDIA out of the SMH, which is a big holding of SMH, and you're probably at new lows, right? While at the same time, and I keep forgetting the symbol, but it's not that important, you look at any software ETF, the software sector as a whole, like I said, it's been unconscious. Now, what's interesting to me is, after all that's happened here since June, that whole unwind, look at where positioning is right now, currently, where it stands. Okay? Yes, semi exposures off the highs, right? They're not as over-owned as they were. You can see they kind of got a little bullish on them recently, over the last month or so, probably going into earnings. But you look at software, and they basically added no exposure, which is amazing to me. And what it actually says is that the majority of those names, they were shorting. They were shorting a lot of those software names. And they've covered shorts, but they haven't really taken the bait yet to go long in this group. So this right now, still, software as a whole, as crazy as the move has been, still sets up really, really well as far, based off a positioning backdrop. Okay, now, could there be a little bit of digestion off a move like we just? Of course there could. But at the same time, while the index, right, or the sector may digest, there still could be plenty of opportunities, especially in newer names, right, or even laggards in the group. But I mean, I was fascinated by this morning, because I honestly was expecting to see something a lot different. Maybe both coming close, closing the gap to the middle ground. So, like Goldman makes the point here with cyclicals. All right? Do you see? Well, what were they making the point here? Semis and cyclicals catch up. Well, the gap closing they're making there with cyclicals. But I look at software in comparison to the semis, and there's still a pretty big gap there and a ton of room to get long in the software group, right? You look at some of the other stuff. So here was Mag 7, okay? And that was even before semis. If you remember, Mag 7 was it. Right? You got people on social media, they just trade those same 7 names. They don't even care about anything else. That's all they have an interest in. Well, that's what a positioning chart exposure chart looks like when you start to see that and hear that rhetoric, right? And you got a decent retracement here, right? You've come well off the highs here. Again, considering where we started the year, I mean, look at where we came in early into 2023 at the complete opposite end, from no interest to all in, and now kind of you're seeing a pretty nice unwind there, right? What else is there? Financials. Okay. Again, the bottom of the market in 2022, if you remember, that's where everybody, I say everybody, but that's where a lot of people were positioning for the new leader of the new bull market. Tech is dead. Financials are going to be the new leader because interest rates are going to stay higher for longer because the Fed cannot do what it used to do regarding QE and cutting rates because of inflation. Impossible. They will never do that again. All right? You remember that. So they all crowded into the financials and sold tech into the lows of 2022. And you can see again here, right? How elevated it was. And fast forward to where we were big now over the last year. They've spit up and puked up all the financials, right? Nobody wanted to own anything tied to financials, especially when SIVB and that whole shit went down. Excuse my French. And little by little, they've been adding exposure to banks, right? But big picture wise, again, maybe you can't make the argument it's at that extreme that we were before this really nice rally in banks. But in regards to a backdrop here, right? And I guess the point I'm making is even if you do get some sort of market correction, which can certainly happen when you get this type of shit that we're seeing now, right? Bitcoin go parabolic, MSTR go parabolic, everybody talking about the same names over and over. That doesn't make you feel good about being bullish. Plain and simple, right? And I tell you what kind of confirms that. We're going to look at that in a second. But at the same time, you don't want to be too overly bearish because when you see positioning in major things, major sectors like software and financials, that is still this light, they're more inclined to be buyers off any pullback, right? Because there's not much supply that they're going to sell into a market that's already selling. I think that's the main takeaway from it. Here, what's this now? What do I got here? Energy. All right? Again, this is not. We are, for good reason. Energy, not our favorite thing to play. Well, the majority of us, right? Especially in stock land. But again, my job is not to tell you guys what to play, is just to share with you guys the backdrop positioning wise, right? And no matter how bearish, for good reason, it looked, especially with Trump getting elected, energy stocks, I mean, there was nobody owned any energy stock, plain and simple. And as a matter of fact, they were heavily shorted, right? So if you were ever going to look to buy something energy related, it probably was a good time to buy it, risk reward wise. Right? If you don't play energy, you don't play energy. But for those of you who do, that was the time to buy energy, right? And you can still make the case it's still the time to buy energy. Yeah, some of us bought, different things just to have some exposure. I bought that ETP. Some of you guys played that ET or some other nat gas name, whatever it may be. But if you were looking to put on any exposure, it was the most ideal time to do that. Again, on a risk-reward basis based off positioning. Okay? As far as some of the other things out there, and we'll get to, I think, the big one that a lot of people are interested in, credit market signals. There's nothing you could say in regards to credit market signals that would make you feel bearish right now. All right? I hear from certain people I follow how liquidity could be an issue here if the Fed doesn't do something. There are things to worry about. You got debt out to wazoo. You got some stuff that looked bubblicious in the price action. But as far as the credit market signals that we pay attention to, they're really not showing much concern about anything right now. Right? I mean, to the point where some perma bears I know are trying to look at it through a contrarian point of view and saying, how much better can these signals get? Right? Like you have credit spreads that have now tightened to levels we've seen pre-COVID, before COVID even happened. Right? And you can see here, these are corporate bond yield spreads. Right? So I inverted the chart like we do here so you can see the correlation with the S&P 500. It also helps small mid-cap names too. If credit spreads tighten, usually bodes well for them. And you can see we had a divergence here. Not in a major way. It wasn't like they were aggressively widening out. But if you remember the discussions we had in the past, even though the market was net, the indexes were net going higher, underneath the hood, it wasn't really that healthy. There wasn't a lot of participation. The breadth wasn't great. The internals weren't great. That's what these credit market signals were kind of indicating to us. That there's not a catastrophe at play, but it's not a healthy upward move in the market. It's not a risk-on type of rally we're seeing. Well, that all changed recently here, right? And the election obviously was the catalyst, but you can see how this is a pretty aggressive move over the last, month now? This actually started up before the election. Okay? So, as far as credit market signals are concerned, and again, they're not really predictive. They don't go out 6 months and tell us what's going to happen. Nothing really does, to be honest. But they're a great gauge on, is there anything troubling now? Is there anything concerning now? Right? Because you hear a lot of noise out there. And right now, they're telling us there's not a thing that credit markets are concerned about right now. And here's the kicker. And this is, I think, for me, is what's got me most concerned. And just to add a disclaimer here, when I say concern, that doesn't extrapolate into meaning that it's an immediate signal and there's concern right now, right? But you have now, quote unquote, Sharpies, right? Commercial hedgers, dealers, whatever label you want to put on them, have hedged into the election pretty aggressively, right? Like if you remember, I've been talking about this for a lot of this bull phase over the last year plus, is that even though the indexes and stocks have appreciated nicely to the upside, okay, that doesn't automatically raise concern that we need to crash or correct, right? We look at things like positioning and Sharpies to get an idea of risk, right? And that, for a good portion of time, Sharpies did not get aggressive on the hedge side, even as equities continued to appreciate. Okay? As a matter of fact, they stayed uncharacteristically long, if you remember those conversations, while we were seeing upside in equities. Okay? And now you can see in this blue line here, and this is just the S&P. I should have put the other one up. But anyway, it gets the point home. You can see they were aggressively hedged going into the election. Okay? Now, tomorrow we'll see. We didn't see much of any covering of those hedges last week, tiny bit. We'll see if they did anything this week. But if they didn't, they are still basically sitting on a huge hedge position. And what that tells us is that not that the market can't go higher, that the equity indexes can't go higher anymore. What it tells us is they're not concerned about any additional upside that's left in the equity indexes. Plain and simple, right? Again, not that the indexes can't go higher, but they don't care if the indexes go higher. They don't want to benefit from that one bit anymore. They're more concerned about the risk if the momentum turns in the other direction. Okay? And listen, there could be a variety of reasons of why, right? You have the small speculative players of the market that are aggressively long. They have been long, but are aggressively long equity index futures. You have hedge funds that aren't short anymore index futures. They are now, I think they're slightly long. Okay, remember, they were short individual names and index futures. So now they're not short futures anymore. They're, again, flat to slightly long. And again, for whatever reason, they see a lot. The risk reward from here is just not appealing. Now, another thing I want to add, and you guys remember we talked about this the last couple of weeks, that is not uncommon going into an election. Okay, as a matter of fact, the last election, they put hedges on going into the election. But then what happened was, right after the election, the next few weeks right after the election, they took off all those hedges. So they hedged into the election. The election, there was nothing that blew up, no concern. They took off all those hedges. So that's what you would want to see here to feel better about it. But this is something that for me, again, I've been looking at this data and information for a long time throughout my career. It's hard for me to get excited on, as far as the indexes are concerned, when Sharpies are aggressively on the other side. Right? That's the total opposite of what I want to, what the kind of backdrop I would want to see. Okay? So that's the dilemma here, right? And this has been a problem for this market throughout. It hasn't been clean, right? Even when the indexes were rip-roaring higher, you had just the Mag 7 stocks carrying the weight, right? Then the Mag 7 stocks got overowned, they got choppy. Then it was just AI and just the semis that were carrying the weight. Right? So it was never a market where you could just get involved, where it was just risk on and you had breakouts across different groups. It's been, as a matter of fact, now is more broad than we've ever seen. And interestingly enough, you have a lot of the big names that have been lagging. Some of them a lot more than others. So I guess the moral of the story here, and for me, if you would ask my impression on all this stuff, I still think it's worth, especially to the end of the year here, no doubt, looking at individual names and those particular pockets that we've been talking about of recent, right? Any pocket of the market that's not overowned and has not gone nuts, right? So if you found a decent entry and you're seeing some buying coming into XYZ at that entry, I think it's still worth looking at and taking a shot. Maybe you don't get as aggressive as you would if prior to where we saw Sharpies fully hedged. Okay, but the reason I say that, and for those of you who've been around and know with me, the last time Sharpies got this hedged was the summer of 2021, and right from that point in the summer of 2021, I had zero interest in getting long anything from that point on. Now, it was a bit early because if you remember, the market didn't top till January of 2022, right? So you had December, November, October, September. You had a good 4 months before the market itself topped and rolled over. But the action really thinned out prior to that. Okay, but that was a different market. That was a different market. If you remember SPAC names and all the little guys, it was overowned as a whole. It was just a different type of market than what we have now. I could certainly see the indexes slowing down, even going net lower, and there being decent opportunities on the long side in individual names, in the small, mid-cap, and large-cap arena. I just think again, it's got to be in certain groups that not everybody's already long. I think the stuff that everybody is extremely long is where the most pain is going to be felt when this, what we're looking at here, comes into play. Right? Because again, even though, and you can see here, right? If they want to unwind this whole thing, they still got a lot more work to do. Now there's a good possibility, even if they did, they don't do it all at once, right? It can take months, and what you get is a lot of chop, right? You get a lot of chop. Like, look at Microsoft, right? Everybody and their mother, whoever owns Microsoft already owned it 6 months ago, right? Everybody knows Microsoft. Everybody's long of Microsoft already. So it's not like this thing's been cratering, but you've had since the summer dead money. I mean, you can make the case really all year. It's done absolutely nothing. Now, go ahead back in early summer and rewind, and if you told somebody Microsoft would be dead money, nobody would. They would laugh in your face. So I think that's more the risk, especially in the under-owned groups, than the overall market itself. I think the market, the indexes, if we do get any sort of pullback, decent pullback, barring any catastrophe, and you never know these days with the talk of nuclear bombs, but barring any catastrophe, I think that there's enough money on the sidelines that they would look for certain parts of the market that they have no exposure in, and that's where money would be deployed. Right? So that's kind of my take. I get it, right? It's not a clean take. SPX go moon or SPX does not these days, right? Everybody wants that kind of plain of an answer. I think we want to be stock pickers here, but even though there's some stuff positioning wise like Sharpies that does concern me, I still think it's worth keeping our eyeballs peeled for new ideas and new spots. See, and the reason why I have a tough time explaining it to a lot of people on this webinar who aren't, and again, this is not a promotion for the Steamroom, but I'm just saying, for me, it's as easy as if something is catching good-looking, aggressive sweeper buying, and it's at a nice spot, right? Meaning it hasn't exploded yet, right? The move hasn't happened yet. The more we see of that type of action and more names, the more I want to be long at least some, right? Even if I'm worried about a little bit of a pullback in the indexes, which would be totally normal. If I continue to see that type of buying show up in new names and new setups, I don't want to ignore that because that's stuff that doesn't rely on the indexes as well. So that's why I don't want to be closed-minded. I don't want to be closed-minded. But in the meantime, we're going into the holiday period now where I think it's even more prudent to focus on individual names. And you could very easily see a continuation of what we're seeing now, where you're getting a lot of these heavily shorted names seeing squeezes, and kind of more chop in the stuff that everyone's been looking at all year. That can continue. That certainly can continue. Do we want to be a buyer of a lemonade after this squeeze like this already? No. You know what I mean? But like I give you like a couple names that we play with. This RBRK catches some action. You know what I mean? Hasn't gone bananas yet. You want to own some? You buy it, right? This flying taxi piece of garbage is catching decent action. Hasn't really gone anywhere yet. I bought some. So that's kind of the approach I'm taking. At the same time, I don't want to be too heavy where held that big of a basket where if there is a pullback in the indexes, I'm going to get lumped up. But at the same time, I still want to look for opportunities here. Energy. We've seen, again, depending on what names you're kind of looking at here, right? I mean, these guys have been the best because they're not gas related. EQT, that's the one I'm in. Several people are in this ET that's gone bananas. AR caught real nice action, was on a top bet list. CRK just caught recent action. So these are names that have just started to really pop out here. They just started to pop out. So while I'm not inclined to chase a lemonade after a move like this, I'm still interested in stuff that is in a lot better risk reward zone there. Yeah, and it's not even max, honestly. It's not even a call. I'm telling you guys, for like even names that, because you guys know at this point in my career, I'm a lot more conservative than I used to be, and that a lot of you are. A lot of you are younger in the game. You should take more risk. The point I'm making with this stuff is any underbelly growth name that catches your eye and you see me highlighting the sweeper activity in, meaning that it's catching legitimate buying. Whether I talk about the name or not, that's something you want to pounce on, right? Because if the street starts to take notice, you see what happens in these things. There are no sellers in a lot of these things. You have, what's going on in like the underbelly names of some of the COVID winners, like a Firm, and that's shorts getting squeezed there. So you're getting shorts getting squeezed there. On these type of names where, they're not around long, we haven't seen flowing, once buying starts to sniff around, there's just no selling. They're not running into, like Microsoft is having issues here where you've had buying for 3 straight years and people are more inclined to take profits and use that money to buy other things. So when you're right, you get a smooth trip. It's not a guarantee you're going to be right, but when you're right, you usually get some nice wind at your back. Yeah. See, this is just, listen, that's why, like, I don't want to talk anybody out of anything here, because I could talk people out of winners. QS to me is like, this is a piece of garbage. QS to me is not a new leader. Okay. So I'll day trade it. I won't swing a position in QS because I know it's a short squeeze play, that type of thing. But if you like it, again, at this spot, and here's how I look at it, okay? And this is why I say that. On a risk-reward basis, right, for a trade, where is this thing going, right? If you're wrong, more than likely, you're going to take a 10, 15 cent loss, right? Stopped out, you move on. If you happen to be right and more buying does come in and they squeeze them, you might get a $6, $7, $8, $9, $10 number, right? So that's kind of on a risk reward. You can't beat that right now. The problem with a QS is if you normally buy it, you don't know when that squeeze is going to show up because they're out of favor. Right now, these things are in favor. So you got a better chance of seeing a squeeze. You know what I mean? Yeah. As far as the company is concerned, it's a whole different ballgame. You understand? So it's just different type of trade. Like I would recommend you treat a QS for a squeeze in where like an RBRK or something like that potentially could be a new leader, right? Like some of you were talking about Reddit off the flow it caught, right? Like look at this thing. Come on, right? Like look at this. reason why is there's no sellers. You get the street excited for whatever cockamamie reason. Okay? But I'm telling you, we've been talking about this in the Steamroom all week. The biggest problem, even if you buy these type of names, is staying in them long enough. But if you like the company, you try to make it your business to roll or trim down, leave a runner, right? That sort of thing, so you can benefit off it. Yeah, no doubt, Sahil. Again, it's been it started off gradual, right? Like we were saying, Sahil, but now you're starting to see it. It's pretty obvious now. It's pretty obvious. And you're seeing it too in the semis to software. You're seeing a lot of those trades being unwound and going in the other direction. So, me personally, that's where I would continue to focus for the remainder of the year here. That's where I think you'll find the most opportunities. That doesn't mean every single big name is going to be dog poop. Like look, see, like Tesla. Tesla was like out of favor, right? Now it's back in favor. So that's how I would want to look at things. What may be overowned and what may be underowned. That's how I would kind of approach things here. Like I see, listen, first of all, MSTR, Sahil bought this thing, when was it, Sahil? In May? So good for Sahil. He's been talking about this for a while. But, here now, guys, I can't help you with this MSTR. Nobody, there's a possibility here that this thing is a top here, at least over a short intermediate term, huge volume reversal, right? But that's not to say 3 months from now it doesn't end up at $1,000. Who the hell knows? But going back to like the Microsoft, the Nvidia, that type of flow when we were discussing it months ago, there's no edge off this anymore. You understand? There's no edge off MSTR anymore. Everybody is trying to trade it up and down. Everybody's talking about it. Sailor is the most popular man on the planet right now. When it was catching bombs, right? If you had the coconuts to buy some then and give it a little bit of lease, that was the time to do it. Again, kudos to Sahil who did that. Not many people can do it, especially when it's not in favor per se. But all these things right now, even like the Bitcoin miners, and you guys know how bullish I was on those things. Right now, I don't think we have any edge in those things at all. I trimmed down a lot of those positions. I've got runners. I'm rooting them on. But off the stuff we look at, there's no edge out of that stuff for us anymore. There's no edge, in my opinion. Because of not only the explosion in the price action, the explosion in interest. Right? MSTR, we would see a 500 lot sweep for like $1 million and it would be on the top bet list. Now you see calls and puts like that all day long. Right? So again, it's just the style, the way we look at things. The way we look at things. The edge now, well, Andrew, I kind of, again, went over it and I have been going over it. The edge to me is still in these places, okay? Obviously, you have less of an edge now, all right? Because, again, when we were talking about energy names last month, these stocks were dead, right? They were dead. Crude was making new lows. The energy names were awful. They couldn't get out of their own way. Fast forward to where you are now, and you got XLE at new highs. Okay? But the point I'm making is positioning is still not overcrowded on the long side here. So if you do get pullbacks, you're likely going to see more opportunity there. Right? Same thing like the software, which we started off at. Okay? What's the software symbol? You guys, I keep forgetting it. The ETF symbol. IGV, is it? I remember. Let me see. Yeah, here it is. IGV. Here it is. Right? So, based off positioning, okay, software still has a whole tank to load. Okay? But, I mean, you've had a nice move here. You could certainly see a little digestion, right? So that's the problem that we're running into now, Andrew, is that you've had certain areas that were set up well. You could use a breather in some of these areas, and I think that breather you use to your advantage, right? Financial, same thing. I mean, we keep talking about it. I get it. Nobody wants financials. I don't blame you. They're not the sexiest thing in the world, but you get a little breather of financials, you're going to be at the same spot you were a year ago. Right? And look at these names. Look at them. That's the problem we have now, Andrew, is that even you had some decent spots that were under-owned and the price action was dead, right? So it was perfect. Once the match was lit, you would have opportunities in these areas, okay? Now the problem is we're at a point where even though positioning is not overcrowded in everything, you've had things come a long way where they could use a rest. I would focus on names more. Again, that's why I hit on that point. I would focus on names. What I want to do is I want to stay as far away from the indexes as possible, right? And I want to stay as far away from chasing as possible right now. Now, there may be nothing to worry about until the calendar flips into 2025 in January. But what I'm concerned about is this. This is what concerns me, right? This is what concerns me at the index level. So I want to stay far away from the indexes. So look at names. I mean, do you trade names? Yeah, I don't want to get back and forth conversation with the delay here. But Andrew, if you trade names, I would look for opportunities in newer names. That's where I would go. Yeah, SN, a tariff play, huh? I don't know. You're asking the wrong guys to heal on that side. But people are concerned about this SN because of the Trump tariffs. This is tricky. What's another name? Let me think of a couple underbelly names you guys can look at. By the way, have you seen this thing? Look at this thing. Oh, here's one that's been moving nicely. Maybe it's got some more. APLD, Applied Digital. This is the one NVIDIA made an investment in. Right? So it's been seeing some flow, some put selling. Already has had a really nice move, but it doesn't look too far extended. Here's another one. I own a little of this one. Not a lot, though, a little bit. AUR. One that has seen action lately. Right? So, these are the type of names right now that are starting to get the attention. And the reason why is a lot of the others have already erupted. I mean, give me a software name, guys. It probably exploded. Give me a software name that you guys are having interest in. I mean, this thing, honestly, we're hoping maybe this thing dipped off earnings, PANW. Probably still has upside. Big picture. NBIS. What is that? NBIS. Oh, I know what that is. That's the GGT Yandex, Russia. This is the Russian stock, right? Yeah. I remember this. GGT. Oh, there's one that hasn't gone parabolic. Uh, TEM, yeah. See, I just want to see flow in it, but yes, it's definitely set up. Definitely set up. Elf. Let's see what Max is seeing on Elf. Elf Beauty. Yeah, I mean, again, the setup is there. The setup is there. If you like it and you're seeing flow come into it, I don't remember any notable flow, but it might have caught some flow. Zeta, that's interesting there. That's an interesting name. I like the name. I traded it. I ended up day trading it. Some people held it an extra day, got a little more kick out of it the following day. I like it longer term. So, in other words, what I'm getting at is you had insiders step in pretty aggressively. Okay? Usually that bodes well. It doesn't have to materialize immediately. Like I used the example, I remember Schwab, right? When SIVB had those issues, Schwab, the insiders came in and started just gobbling up stock. It hung around. It hung around there for a bit. But they kept buying, and ultimately, you get rewarded when insiders get that aggressive. That's kind of how I'm looking at Zeta. So ideally, off the flow, how I would like it to set up here, kind of hang around here a little bit, and then see some good-looking sweeper activity with a little bit of time. That's ideally how I would like to see it. Oh, yeah, that's a beast, right? Let's see. What's this one been up to? Paxon. Yeah, look at this guy. This is the old taser. Absolute beast. What is this? What else? Soon. This is a spec name. I mean, this is not a bad spot from what I remember. If you like it, it's not a bad play, Stays. Not the worst play in the world. You could get lucky. You know which name I played, Stace? I sold it though. I'm not in it anymore. I was hoping to get lucky in it, and it didn't really go after the day correction. This BBAI. So what happened? It caught some really nice action. I bought equity for a day trade, and I said, you know what? I'm going to hold it an extra day just in case they come back and hit it again. They really didn't. So I sold it yesterday. Looks like it went a little bit higher today. But this is kind of to your soon, very similar. I just like the spot on this BBAI better. You understand it didn't really go anywhere at all yet. Soon, you got a little bit of room depending on where you own it. Because soon, like it can pull back here and still look okay. You understand? You're not early, I guess is the best way to say it. But it's not bad. If you like it, I don't want to talk you out of it. And the flow's been active, Stace, and soon. Net, that's interesting. Let's see. Yeah. It's been moving here recently. It looks okay. It looks okay. Again, I don't remember. I'm sure it caught flow, but I don't remember anything notable. By the way, before I forget, did I talk about the flow today? There was a couple names. Anybody know this name? This is what I wanted to ask you guys. What's the symbol? Kevin Durant, KD. Anybody know this name? KD? So this was one of the names today that caught my eye action-wise. Put it on the top bet list. And it caught a really... Let me pull up the bet. Hold on. No, I can pull it up here. Hold on. Oh, they were leaps, right? Yeah, they were leaps. So this is the order here. I don't. Can you guys make that out? Jan 2026, 35 calls for a little more than a $500,000 in this name. I mean, that's a good looking bet for this stock. Now, you guys know why I didn't tail it or why I didn't buy it because, this, right? Yeah, big move here already. But based on just the flow itself, like that bet with time, that's a doozy right there. Anybody got a sexy story on this? KD? So the best action today was in the KD and the Joby. I bought the Joby. What did you guys say? You guys talking about this? Four likes greedy. What? Four likes greedy, selfish trader? What the hell is he talking about? I don't know what that guy's talking about. Look left. Look left. So nobody knows this name, or am I still on delay? Anybody? IBM spinoff. Really? I did not know that. How come I don't remember hearing this name? And I remember flowing it, though. I remember KD, because I remember saying Kevin Durant. I remember that. Let me see, is there anything... Yeah, this is it, right here. What was the date here? July. Oh, that was the summer. That's old. These are old. Maybe that's where I know it from. IT name, well, I know. Yeah, I was hoping maybe one of you guys had something, a little sexy story about it. Just because of the suite. But for anybody out there who knows the name, likes the name, got a real nice suite today. Real nice suite. Really nice suite. Yeah, so this is a spin-off. What did it come in the 50s? This thing. We'll probably be talking about it at $50 by the end of the year, right? The way this market's going. What else? Anybody else? ON, that's been a good performer. And it has been for a bit now. This is not really new. This has been really good stock. ON. Really good stock. I can't get over the Reddit, guys. This doesn't make your head spin, this Reddit. Like, I know MSTR is the talk of the town, and I get it. But this Reddit is blowing my mind. This Reddit's $160. I remember us talking about it over here in the 50s, in the 40s. KD is an IBM spinoff. I know, yeah, somebody mentioned that. Interesting. So, again, not really my type of setup, but on that KD. But if you like to, if you don't mind chasing, or some people, have a different style. The sweep was good looking with time. So even you could even wait to see maybe if it digests a bit because they were 2026 calls. But you got a real bet there. SRVE, I know that name, SCRV. I mean, I think we looked at this days. But, spot wise, not bad. It's not the end of the, you know what I mean? Like, if you're going to buy it, it's not the worst place to buy it. Not the worst place to buy it. We've seen a little bit of flow, but nothing really too crazy in it that I can remember of recent. That's one of these squeeze names. This is Unity. Yeah, this is a tough one. I don't know. It's messy. Yeah, for a trade, if you like it for a trade, but this is coming out of hockey stick mode, right? Which could be a little difficult, but may net go higher. DXCM. Yeah, yeah, not bad. Some of these, see, at least the names you guys are bringing up that's exactly what I was trying to explain earlier, right? So if you see quality buying in any of these names that look like this, and you have an interest in, I don't think you ignore them. I think you take advantage of it. I think you take advantage of it. Because what you could see is, again, you could see some of the hotter stuff, the over-owned stuff come in, and this type of stuff outperform. You don't necessarily, you don't need the indexes, to rip roar higher. So if we happen to get caught in a little choppy waters for whatever reason, it's hard to see unless something shows up at geopolitically or something that can really shake the tree here to the end of the year. It's possible, but you're going to need a catalyst. Otherwise, I don't think positioning is going to unwind off itself, in my opinion. You probably get more of a, kind of like we were seeing here, kind of like what we're seeing. Maybe a little bit of chop included. Diamond hands from Reddit, now Reddit flying. Isn't it crazy? Isn't it crazy? This is my type of stock. As you guys know, the post IPO, but I didn't think it'd be at $160 here. Like, do they have good numbers? Like, their numbers are decent? Looks like they had a profitable quarter here. Jesus. Need flat again? See, that's ultimately you're probably going to get some nice setups in that trade, the anti-Kennedy trade, but you need the slowing to slow down. I mean, the selling to slow down is what I wanted to say. How about names like this? I haven't really paid attention to any of these. They still look okay, right? Starbucks, Chipotle. Look, these names still look okay. 400% earnings on Reddit, so that'll do it. I'm kind of annoyed by it. I'm not going to lie. That's a real nice explosion there. I've traded it a couple of times. I know several of you guys played it. I remember you guys asking about it continuously. Sweet green. That looks good. That looks good, Max. That definitely looks good. You got earnings out of the way. Definitely looks good. Yeah, I like it, Max. BE, yeah. Couple guys in here caught it. A few people in here caught it nicely. Did you catch it? I think they sold it, though. I don't think they're still in it. But they got lucky and caught the news. BE has had some flow. I personally, I didn't play it. Just because it's I kind of put it almost in the QS and plug category, which I probably shouldn't. I just did. Very nice, Ed. But what about, out of curiosity, the Bitcoin miners? Anybody still in any of them besides runners? Anybody still actively or holding on to full positions there? I mean, they've all been great. Wolf, still looks really good. This Cores still looks really good. The other ones, I saw that recent pop in them, but they still look good. BTDR. What was the other one again? Oh, BTBT, Hut. Hut look really good. Look at that. But now I think kind of what it's good and bad. What Bitcoin has done here now, I think took all edge out of these names completely. You know what I mean? And don't get me wrong, we obviously wanted that Bitcoin move because you got that extra pop here, especially those of you in MSTR. But I think that kind of now sapped our edge out of these names. They can continue to go higher here, but I'd be more. I sold into this rip. Still holding Wolf CLSK runners. Yeah. So I don't have CLSK. I got a bunch of runners though, so I'm rooting them on, but nowhere near obviously the weight I had. I got Hut, Wolf, BTBT, BTDR, and I think one more. I got runners in each. BTDR tenor. That was one of my largest positions. I just sold it last week. Here, I mean, can it go higher? Sure, but kind of the point I was making. You got Bitcoin euphoria now. The problem with that is if Bitcoin if that trade unwinds, right? So if you get a Bitcoin correction, you're gonna have air come out of these things. There's no ifs, ands, or buts about it, right? So you're at the mercy. Again, it was a good thing. Don't get me wrong. I'm not saying it's bad, but you're at the mercy of Bitcoin in good and bad now. Nice, Adil. I mean, come on. MSTR. See here. I think that you have to do that. Sell and leave a piece. You got to. After a move like that. I mean, this is nuts. 80% of miners today red. Yeah. Very possible. Very possible. Yeah, I wouldn't short them. I wouldn't short them. But, yeah, you shouldn't be taking that advice from me or anybody else trying to tell you, where a top or a bottom is and shit like that. Nobody knows. You understand? All that you come to on this webinar for, or if you're a Steamroom member, is, for the flow and the backdrop, plain and simple. Was that good looking sweeper buying in the name? Yes or no? That's all you want to know from me. Everything else I spit out of my mouth about the birds and the bees of the market is just conversation. Nobody knows nobody knows shit. Yeah, Riot, what's weird about Riot is Riot saw some buying and it never really went anywhere. Don't get me wrong, it ran $3. Well, even more than that, up at 15. I don't know. I thought we would see a bigger move out of Riot if Bitcoin exploded like it did. That's what I thought. But I never really owned Riot. I traded it, but never had a position in it. I come here just to hear my voice. There you go. That's all. Even better. Just to shoot the shit. What else? Anything else? I'm trying to think of, again, I'm trying to think of newer names that caught action. What was the one today? Yesterday, the energy name. A lot of financials, too. A lot of financials. Anybody have any interest in any of the underbelly of financials? Anybody buying any of those? Because they still have a lot of upside left, man. This owl that I have up on the screen has seen nice flow. They're slower movers, though. They're slow. NNE. Oh, yeah. That's another power play, right? Yeah. I remember you guys bringing it up. A lot of you bringing it up. This was at a really nice spot. I remember this. NNE. Shank, I think for a trade, Shank, if you like it for a trade, I that's the way I would approach it. Just because the move that it has already been there. But they did do some buying today. You had a little bit of a pullback. Maybe even worst case if it tests the upper end of this range, if you're looking for a trade. Yeah, but this is a big move. And I listen. Again, we were seeing. Look at this. Okay, I didn't think this APP obviously was going to do anything remotely close to this. Huh? Like up here, APP. Yeah, that's I stopped looking at it now. Like I'm not even paying much attention to it up here. And then you're telling me it gaps up and goes from there and doubles? Come on. That's insane. Insane. SYF, that's another good underbelly financial name. That's another one that has seen nice flow. So I'm interested in this space. I'm hoping, if there's something that hasn't really been moving, has been consolidating a little bit. I doubt we're going to see it until early next year. But I would like to own something in the financial underbelly at some point. I'm pretty pissed off. I'm a little late to the party price action wise. But, I just, positioning wise, like we were saying, you have a lot of buying left in the tank. Right? And not to beat a dead horse, but here's what I'm getting at, because I know it can get confusing sometimes, this stuff. You see, like we're talking about financials, right? A lot of buying left in the tank. Software, a lot of buying left in the tank. Okay? The problem is for the indexes, okay? Futures positioning, index positioning, it's the total opposite. You don't usually get that. That's a weird setup. You understand? Like right now, positioning on the macro side, ETF and futures, is at long extreme to, that's an understatement. Like asset managers have a long position in ES futures that we've never seen before. That's how large. So that's not a problem until it starts to unwind. You understand? When there's a reason for them to start selling, that could become a problem. So that's the difficult part to handicap here, is that you got stuff like software and the financials that there's no exposure in these things. But at the same time, at the index level, they're loaded to the boat, right? They're loaded up to their eyeballs. It's just a weird setup. Now, it's certainly, right, we've seen it at times. It's certainly possible that the indexes can get at the least choppy, if not a little heavy, and certain spots outperform, right? Where you get the banks can still do okay, right? Software could still do okay, but some of the other stuff treads water and maybe weighs on the indexes. I think that's the highest probability bear scenario here. I think that's the risk right now based off what we look at. But you look at any measure that we track. What's another one? I'm trying to think. Funding spreads. Here, I got it on my Twitter. Let me see if I can find it on here. Come on. Hold on. I got it right here. So funding spreads measure leverage in a sense. You gotta be kidding me. I'm typing into the wrong thing. But I'll show you what they look like. They're pretty crazy too. Why can't I find it on here? It's so annoying, man. Here it is. So you see this? Funding spreads. Most requested chart this week was funding spreads. We believe the rising funding spreads in recent days is most likely the result of professional investors increasing demands for levered long equity positions. We believe demand can change quickly, but supply changes are less frequent and are less of a driver of funding spreads over the short term. This belief is supported by the high correlation between funding spreads and the S&P 500. Many investors assume year-end funding spreads increase funding spreads. What? Year-end funding pressures increase funding spreads, but we don't statistically see significant seasonality in the data. So that's that red line here. See that red line? I mean, that's pretty aggressive. I tell you this much. If we don't get some sort of digestion here, the end of the year, January setting up for pretty decent correction. Right? Sure looks that way. And if you remember, we were kind of talking about that in recent weeks, right? If you get some sort of choppy breather here for the end of the year, you almost could see a breakout higher from that into early next year. But if you get the kind of chase slow melt up through the holidays and positioning gets even more crowded, it's just not a good setup heading into the new year. Not a good setup. You know, so that's kind of, as far as indexes are concerned, and those of you who have an interest there, that's kind of what to keep an eye on over the next, the remainder of this year. But again, we'll see. We'll see. Probably going to take a catalyst to ruffle some feathers here, and I don't know. Hey, listen, we have Trump in office next year. That's a walking catalyst tape bomb right there. But Sahil, I still yeah. I still think, like, kind of what you and I were talking, that even if we do get that sell off, come the beginning of next year where things correct, under the hood, I think there's going to be a huge buying opportunity in names. Huge. Small mid cap land, that stuff. Huge. 700%. I mean, it's insane. It's insane. I wish, obviously, if we could rewind, I think that's the main takeaway from the environment, is that if you have a stock that is in that sexy AI scheme and has that, the profit growth characteristic, there's no reason to sell. There was no reason to sell. Right? The appetite for those type of names. And that's what is going on in software now. You see it off the snow quarter, right? So you see it off that. Anything they can tie AI and software to, there's a crazy appetite right now for. crazy. Like remember, all year it was up until the summer, it was the semis. It was primarily just the semis. That was the AI play. So the market was starving for other things to get AI exposure. D-Dog, I mean, I think just these names in general, these cybersecurity names, I think, Crowd, you had the dip buy opportunity there. Look, came right back. PANW, right? Which you got Pelosi in. And this new one, what do you think it is? Cybersecurity, RBRK. That's, are you in that T? Are you in that name? They're still buying this name, COHR. Keeps going higher and still PLTR, good call. That's another one. Like if you spot a name, software, and right now you don't even have to really dig deep to find AI ties because a lot of the software that's really breaking out catch and flow has AI ties. But if you see a software name with those fundies, with that growth to it, catch and flow, you got to be ready to pounce. You got to be ready to pounce. Yeah, Shank, that's the best way. Same thing. I did something similar. I trimmed a little bit, but now I got some equity. I'm just going to leave alone. You know what I mean? But you had to take off some of this ahead of numbers. Yeah, you get a $4 or $5 move. How could you not? Before numbers, and then leave some. That's all. Yeah, again, market permitting. I think this thing has a long way to go. A long way to go. Right? Regardless, like if you made some money, you lock it in, leave some longer term, leave it alone now. That's the only way to try to catch these moves. Otherwise, it's really difficult. Trust me, you're taking it from somebody. I just I can't catch these big moves. I can't. I catch them with small runners. That's the only time I catch them. What's that doing? Did that come back? AMPM or no? Oh, wow. Nice job, Shank. You bought it on Friday, I think, right? Thursday, Friday? This got hit because of the all the defense names. It's on the, what do they call it again? Where they're chopping spending. This name caught a little bit of action. I like it, James. You have earnings coming up, though. That's the problem. So I don't know. Yeah, I'm not going to tell you I can predict earnings. AMD is just in bad shape. But again, I still think, if we see action in it, accumulation in it, you're going to want to buy it longer term. You're going to want to buy it. For trading purposes, obviously you don't want to trade any of these things right now. Look at this guy. Right? Same thing. Look. I mean, that came in a decent amount. Let me tell you something, okay? LRCX, you're telling me, right? And let's say it happens in January, okay? And this thing is lollygagging down here. You have a round of buying coming into LRCX like we saw in ARM, right? Where they buy a year out and they bomb it. And now you got LRCX sitting in the 60s, 70s off a correction. You're not going to be interested in buying it with some time? Come on. I mean, if you don't buy that type of name then, you should never play it. You know what I mean? You should never play it, in my opinion. Because, like here, see, this, right? You want to trade this, right? You see a little dip, they sweep it, you buy it, you sell it intraday, you sell it a couple of days later, you flip it, right? You want to stay tactical there. Because, again, it's getting crowded, right? There's a ton of flow. There's been a ton of flow. Okay? The only way that LRCX or an AMD, okay, the only way you're going to get an edge from the flow again is if this happens. This has to happen. Okay? This move higher, this parabolic move higher, the flow that you see here means absolutely nothing. That's like MSTR right now. Okay? Everybody's playing MSTR right now. Everybody. Right? But here, nobody has an interest. Right? It goes on everybody's do not trade list. Knowing your time frame is the most important thing when trying to find an edge or flow. Okay, there's stuff you are tactically trading, right? You don't need to see good looking accumulation to trade something. You're selling it the next day. What good is that good looking flow, right? But when you're building positions with time, you want to see quality buying coming off congestion where nobody's in. Because then when you're right, if you're right and when you're right, you're going to get paid. That's where the whole crowd comes and you can sell it to them and keep running. So point being is, as bad as these things look right now, and don't get me wrong, these things, you hear me talking about the semis every day, how bad they look. I think now they're at the point where if you see accumulation and you can be patient, that's the beauty of it. Here, back then, you couldn't be patient. Anytime you caught sweeper activity, the thing would fly. You know? I can't trade those NVIDIA things when they're going MSTR right now when they're going bananas. But here at AMD, you have somebody step in and let's say they buy 26 calls. Decent size today, a couple of sweeps. Then a couple of days later or the next day, here he comes again, adding to the pile. That's what you want to see here. That's what you want to see. So these guys, again, for trading purposes, basically you want to ignore them because they don't have momentum now. But for position purposes, right, stuff you can buy, you can be patient in, you don't have to worry about it running away as you're buying it. These are the type of setups, and this is totally normal. This is what I'm concerned about up here when everybody on this webinar is asking me about what I think of AMD. This is what I'm concerned about. Okay? The reason why is because of this. Not because I have a crystal ball. It's because of this. Right? If everybody's already in, who's left to buy? It's just logic. Okay? They can go higher. Again, it's ridiculous to say there's nobody left to buy, but there's more prone sellers than buyers, right? When you reach that point, here's like a Microsoft or even an NVIDIA now, okay? Anybody who wanted to get long and is bullish Microsoft is already long Microsoft. Think of it. Any institution, right? Any professional who's bullish the name Microsoft has as much Microsoft as they can possibly own. Okay? The only way they could add exposure, some can't. They reach thresholds where they can't even add. They have to trim because it gets too big. Okay? But there has to be some sort of catalyst where it takes it to a whole other level, right? Oh shit. We gotta up our thresholds. That type of shit. Otherwise, what is more inclined to happen is they become a source of funds for other stuff. Oh shit, software is starting to break out. Let me sell a little Microsoft that I'm up nice, huge on, and I'll buy some software. Oh, utilities are breaking out as an AI play. Let me sell some Microsoft and some Mag 7 and buy some software. Right? And that's what you're seeing right now. Here, the Mag 7 exposure. This is what you're seeing. Micron's definitely another one. No, all of them. All of them. All of them. No doubt. People forget how bullish they were on these names. Right? Micron. What was Micron was Micron. They were bulls. They thought there was never going to be a down day again. But this is normal. Now, they can do this for a lot longer than we would like. That's where, in my opinion, the flow plays a big, big part. Right? You want to be patient enough. If you're looking your chops for a Micron, you start to see some good looking flow, you may want to put on a piece with time. Just make sure you have room to add, But if you're not licking your chops, you can be patient in it. You can wait. All right, Microsoft caught some decent action today. That was good. Let's keep an eye on it. Oh, the following week, they came back and added some more of those Micron calls 9 months out. Pretty decent size, pretty aggressive, right? You got time to think and put on a position. Not a trade, you're putting on a position. Yep. So again, I'm biased, but that's where I think the flow plays a huge part. You know what the problem is when you get into this type of market or any bullish market where things are, you got Bitcoin flying all over. There are things moving where some people care. They don't care if they see flow or not. You know what I mean? MSTR is up 50. I want to own it. I don't care is there flow? Please tell me there's flow so I can just have an excuse to buy it. But in the tougher names, I think the flow plays a much bigger role because it helps you with the timing. It's not a guarantee, but it increases the probability that something may come out of consolidation sooner than you think. And we really didn't have, if you think of it, we really didn't have a lot of sexy names that had that type of setup, right? Because all the good-looking names all looked like Micron. They all were just ripping higher, right? From 2023, they bought every little dip in these things. So now, for the first time, you actually have these things with some digestion. They shook the tree. They're shaking out all those riffraff. No, I was just giving a hypothetical. Like LRCX is one of my favorite stocks. If you put a gun to my head and said buy a semi, I would probably buy LRCX. It's just an animal. Like when the semis get hot, you want to own LRCX. When institutions want to buy chip stocks, they buy LRCX. Just a beast. And it's gone through periods like this. It's not like it doesn't happen. Look at this, right? Big rip. Huge rip. Okay? What follows? Look at this downtrend, right? And what do you think happens in that downtrend? Nobody wants to touch it. Nobody's looking at it, right? It catches flow. People ignore it. Nobody cares about anything. But if you're seeing some accumulation in the flow with time, right? Even if you buy it here and you're early and there's some more selling, when that time comes, when it turns, that's where you get paid. Now again, these aren't trades, right? Everybody's got, some traders do a little bit of each, but Some are more tactical, right? Some of you guys are trading ES and you're out the same day. Obviously, this means nothing to you, right? But I think it's so important and so overlooked is time frame on a lot of these things when it comes to flow. What looks horrible to you can look so appealing to a player with a different time frame if it sees action. What ZIM? That is isn't that a Chinese shipper or something like that? There's a Chinese shipper. Yeah, I mean this name catches action from time to time. I don't remember anything of recent. But it looks okay. Isn't this Chinese, or am I thinking of someone else? Hold on. Oh, Israel. Jeez, I was off. I was off. I mean, it doesn't look. These numbers are real though. Are these real numbers? What the hell kind of quarter is that? That can't be real, and the stock sold off on it. Anyway, it looks okay. It looks okay, Pablo. It looks okay. And I mean, if you're in the steam room, I would keep an eye on it for sweeper activity. If you're not, ask me on this webinar here, and I'll make sure I remember if it catches any action. But it hasn't caught anything recent that I remember. Anything good looking. CP. This is a rail, right? From I think Canadian. Yeah, Canadian. This caught a leap sweep today. I think that's why you're asking about it, T, right? But definitely an interesting spot. T and I are on the same page, but T and I go back. We go back a while now. By the way, anybody dip buy gold? Of course I didn't. All right. See, that's my problem. I'm not afraid to admit it. Okay. Up here, I'm worried about a pullback in gold. Right. I'm long gold, so I sell some, and I say to myself, but if it does come in, right, I'll buy back. Right. That type of thing. Like you feel good about it needs to pull, but you still want to own it. My problem, I never get back in. It's amazing. Never. But you couldn't draw it up any better, this pullback in gold. Look at this. Right? Look at that. No. I'm out of JNUG and I'm out of Nugget, and I'm holding some GLD left. That's all I got in those ETFs. That's all I'm down to now. That's all I own. Well, the Nugget. Oh, so the Nugget, I actually looks like I made Let me get this off now. Looks like for now I made the right move on the Nugget. I sold here. See where the circle is? That's where I bought, and this is where I sold. But you got a lot more bulls now, Stace, in this space. You know what I mean? There's a lot of bulls. A lot of bulls. A lot of people bullish. Anyone know anything about Saro? I've never even seen that symbol before. Let me see. Ooh. You're talking my game though here. I like this. What is it? IPO or spin-off? My dad sold 30,000 coins for a loss. Oh, I thought you meant, man. Jesus. Yeah, that's right, Joey. You're a big gold guy, huh? That's that's your business over there. Joey, you think it's going higher though, right? Much higher, big picture wise? Joey's got some good insight on the sector, by the way, guys. Gold. That's what he does. So any gold questions, definitely hit him up. This arrow, I like the look. Does it trade options? Who mentioned this arrow? Why does that keep happening? Oh, I wonder. Trump rally pays with the pound, standing on switch, swings to profit of a nickel. Saro is an IPO. Put it this way, James. If this catches sweeper activity, I'm buying it. It's that simple. I don't know if it trades options yet. Here, T. Hold on, I'll show you. That's why I thought you brought it up. Where is it? Is this today? Why is and I caught some recently here. What's the day on this? November 6th. That's not it. Maybe I was out to lunch. Here, let me show you, T. This is the action. You know what I'll do? T, I'll send it to you on Twitter. It caught a 2027 leaps. I think I was out to lunch and I seen it. Nothing huge, but not a bad looking sweep. I'll send it to you on Twitter, the details of it. On that CP. SMLR. This sounds familiar. Let me see. SMLR. Oh, man. This sounds familiar, too. I don't know where I know this name from. That's a nice little giddy up here. Ah! Gee, that's hysterical. Oh, my God. What symbol were you asking about, T? Was it a different symbol? You typed it by accident, and I'm talking sweeper activity. SMLR. Oh, that's where I know it. Thank you. Right. So they buy that's what they're doing, buying Bitcoin. That's where I heard it. Gotcha. Baby MSTR. What a move. What a move. So yeah, that's it. That's it. Again, I would keep, if you play the little names, I would not necessarily cheaply priced, but more of underbelly names. I think still the mojo should stay there, barring no market catastrophe. Even if we chop around, I think we still have some decent momentum. Underbelly names, hopefully even the cheaper names that we've been seeing. So I would stick to those names if you can kind of get away from the indexes if we do chop around. And that's it. And then, like we said, the semis and stuff like that, just keep tabs on for go look and flow with time. We can be patient with it, and I'm telling you from experience, we have a habit of ignoring it when they go out of favor, and that's where you miss the best entries. I can't stress it enough. Some of the best entries is when nobody's looking, nobody cares. It's on people's do not touch list, and it catches sweeper activity. Case in point, and once again, Sahil nails this one. Tesla. Okay? You had this menagerie where you couldn't make any money in it for a long time, but don't forget, it went parabolic before that. Parabolic. Right? And then late in this consolidation downtrend, whatever you want to call it, it started to see some good looking activity. What was it? Early fall, maybe late fall. But where are we? In November, the end of November, maybe it was September, October. I remember they were buying Febs. Maybe Sahil would know better than me anyway. Yes. I mean, Sahil nailed it. Now, again, it's not easy. It's not easy to pull the trigger when they look like this. But if you're taking that approach, you're going to be patient and you're going to give yourself the time to let it marinate. Give it a chance to work out. If you play the game like that, that's your style. This is where you want to be paying attention when they're quiet and nobody has an interest. Okay, if you're trading tactically, you obviously that's the last place you want to be. You want to go where the momentum is. Okay, but for positions with some time, and that's where the real payday comes. Let's be honest, right? That's where you get paid. And now, right? Hill has an entry in this name where he's got so much cushion, he don't need to worry about it now. Trim, roll, take some chips off the table, leave some. The more you like it, the more you leave, right? You're not getting FOMO to chase. It comes in for a couple of days. You're not pooping your bloomers. That's where those entries are born from, when nobody wants it. Right, and then the Elon, and again, it's not like you're buying it for that reason, but that's the thing. Who knows what could happen, right? The key is you're buying something that's out of favor, right? And then again, that's where the flow helps out sometimes too, where it's out of favor, but now you're seeing some of the smart money taking interest in it, right? If that environment changes, if that sentiment changes, you know what happens in these things. So that's the moral of the story here today. We got to be a little bit cautious because of Sharpies, right? We want to stay away from anything really highly correlated to the index that's extended here, just in case we get some sort of catalyst for some selling. But there are definitely things, trading wise, there are definitely things to do and things to keep an eye on into year end for some decent setups going into next year. So what I'm getting at is it's probably not a bad time to stick around during the holidays if you can. Not a bad time. All right, my friends, always a pleasure. Thanks everybody stopping by, spending some time with me after hours here. Enjoy the rest of your night, and I will see you Steamroom members mañana. Have a good night, everybody.